Welcome to Peak Market Watch Live. My name is Anton Madley, and my co-host today is Sean Martinez. Uh, what we are asking today is the Fed going to pivot this week? All right. John, what do you think with all the news that we have had over the last uh, few weeks? Obviously, there have been more discussions whether the Fed is going to pivot. What's your take on it?
Anton, if I could call this perfectly, you and I would be much richer, right? Um, but in all seriousness, um, I am of the personal opinion. I don't think we get there just yet. I know we've got a lot of information you wanted to share with our audience of how we might have what supports our view. But my take is I think we still see another 75 basis points. I'm sure we're all going to be looking at the commentary for what to think about in the coming meetings later this year.
Yeah. All right. Very good. So why don't we jump in, right? So when we look at what the Bank of Canada just has announced a couple of days ago, they have, uh, to everyone's surprise, they have not really uh, uh, increased their rates as much as everyone thought, right? And obviously that is a big question mark now. Uh, why that is, right? And I think when we look at uh, their increases, we also have to think of that their inflation really already has come down uh, more than in the US. And I think that is definitely an important aspect we need to consider, right? Uh, and when we look at, let's see here.
Yeah, and Ton, I was going to ask, what kind of contextual numbers could we look at to kind of give us a feel for maybe why Canada might feel more comfortable making that move now versus our outlook?
Yes, definitely. I think what certainly what is important to highlight that Canada really has been more aggressive with their rate increases compared to the US, and at the same time, as we mentioned before, their inflation already came down from the low eights into the upper 6% mark, whereas obviously in the US we are still quite a bit higher. So I think it's important to recognize that Canada is kind of a little bit farther ahead. Uh, Now, that doesn't mean, obviously, that we can compare Canada and the US in the same fashion, right? But certainly, when we look at the US, and this is from the Federal Reserve, the Cleveland office. When you look at where we were uh, just about a month ago, clearly the expectations were that that the inflation was over year would still be much higher, whereas now the inflation expectation over a 1 year horizon clearly dropped already from a 4% point two to 2.9%. So overall, certainly the expectation is that the inflation is already starting to ease, and that's really also why the discussion has come up much more. Why maybe the Fed could potentially pivot as early this week.
Yeah, and those are great insights. I'm curious to see what else you have.
Yeah, and now one of the key pieces, right, of what the Fed is really looking at as whether we are now entering into a recessionary environment. And as we know, as soon as we have a recessionary environment that is ahead of us, rates tend to come down because the economy is weakening, and in order to support the economy, rates also need to be lowered. And what we have seen now earlier this week, last week, I wanted to say, is that the 3 month Treasury and the 10-year Treasury they have inverted. With the 3 month Treasury yield being higher than the 10-year, and that tends to be that indication that we are uh, entering a recession. Obviously, some will argue that we already are in a recession, or at least a technical recession, and that is always a little bit of a question how exactly that is being measured. But certainly by that piece of information, that is giving the Fed clearly a reason to think a little bit harder of whether pivoting is already in the cards as early as this week.
Gotcha. And I guess one question I think folks kind of maybe think about, and we don't have to maybe pick this up this market watch, maybe the next one, but how often does the Fed get it right, so to speak, where they apply the appropriate amount of breaks prior to causing that recessionary pressure?
Yeah, that's a very good point, and maybe we can look at that in our peak market watch just to get a little bit of a to look behind into history to see how accurate they have been in their projections, right? When we look here, right, regardless of whether they have been accurate with their actual hikes and rate reductions, we certainly have a situation where we have in where the 3 month Treasury yield and the 10-year inverted shortly thereafter. There was a recession, and we had that in the obviously in the 90s when it happened, from the savings and loan crisis all the way back in the 80s. Then we all know what has happened in with the dot-com crisis in the early 2000s, and then we had the same situation, obviously with that then with housing crisis, mostly on the residential side, that then caused the major recession in 2000, late 2007, 8, 9, and 10, and or into 2000, mid 2009. So when we look at that, also very briefly, during COVID, we had 1 quarter, I think, that was a technical recession. There again, we had the inversion. I would say COVID is such a unique situation. I'm not sure that we can really use that as an example. But right now, we have inverted, so that is clearly a signal that we will enter a recession. And again, regardless of whether one believes that we are in a recession or not, this is a signal that has been really accurate over the last few decades. Right.
Right, and
Yeah. Uh, Now, I think what is certainly also important to highlight that Nick Timiraos, he is with the Wall Street Journal, and he has really good insight with a lot of officials with the Fed. And so while his feedback that he has received is that it will be a 75 basis points hike this week, that there is already a discussion about pivoting, that certain officials within the Fed are not comfortable with going further, and uh, this is really an important point that they are afraid that they are creating too much of a sharp slowdown, right? Powell already indicated the cost to beat inflation is a recession. The question is how sharp of a downturn we need to go through in order to battle inflation, and that is definitely the concern that a number of uh, the Fed officials already have communicated. And again, that is where the market then also, together with Canada, came up with the conclusion: hey, I think we are in for a faster pivoting than what we thought just a few weeks ago. Now, let's talk a little bit about why the Fed likely is going to still be hawkish. I think we can all agree that this week very likely will be 75 basis points. The question will be, is it going to be 50 basis points as everyone expects in December, or are they going to go with 25 basis points, or do they even stay where they are with the raise this week? Uh, Now, when we look at the GDP that was also released last week, came in pretty strong at 2.6%. So obviously the economy is still growing. There hasn't been a sign yet in the third quarter of 2022 of a recession. And with that, that gives us only an argument to Powell and all the other Fed officials to continue with that hawkish stance, right?
Yeah.
Uh,
Do you?
Go ahead.
Sorry, just gonna. No, I was just gonna ask. I mean, it's very not wholly surprising necessarily, but just a bit surprising that um, third quarter comes in that strong after what I paid for gasoline in California for my summer vacation. I mean, and obviously we're past those summer travel peak highs, but it's interesting to see how resilient the economy remained despite so many people having to absorb those high fuel and energy costs.
Yes, absolutely. Right. The travel still has been strong, right, and we have seen it with increases also in airfare. Obviously, they reduce some of their schedule, but planes are full, right? So where it comes to road travel, when it comes to air travel, people have been traveling, and even when you look at overall consumption, there just has not been that slowdown that everyone was anticipating with that high inflation. Maybe it's just still an overhang of all that stimulus money that has been put into consumers' hands, but also corporate hands, right? So there's just a lot of liquidity that has been pumped in into to for the benefit of everyone, right?
Yep.
Uh, and then obviously, clearly, when we look at the unemployment rate, people are still, everyone who wants a job essentially can have a job. Maybe it's not the job that they want, but clearly businesses are still have a very hard time hiring. There are some indications that some companies, particularly on the tech side, or and white collar, if you want to call it that way, that already have started to scale back and also uh, certainly no longer hiring, and in some instances they are actually reducing the workforce. But overall, obviously, it's still at the decade low, and I would say when we look at previous indications by Jerome Powell, it was has always been that as long as inflation is very high, combined with employment very low, we we are still in a situation where we can raise the rates higher, and I think that's really the GDP still being positive, inflation still being high, and unemployment still being low. That clearly points towards a continued hawkish stance, right? So that's only
Yeah.
this week. There is no reason why they shouldn't go with 75. It will be very interesting to see, and we cover that future peak market watchers, obviously, where the new numbers are coming in from a economy perspective as well as inflation perspective, and that will potentially then have an impact on where ultimately December is going to come in and how they then will behave early next year, right?
Yeah, and I'm sure a lot of our investors are maybe kind of starting to think about winding down the year end, thinking about how will they position themselves for start of year because I'm sure hopefully it'll be like other years where things are a little bit of a lull in the beginning of January, but then usually by spring we pick up the deal activity again. So maybe we'll have some positive news by then on our rate outlook for our investors.
Yes, definitely. I would say certainly, as it is always for year end, unless you already have a commercial real estate deal under contract, it's getting pretty tight timing wise. Certainly, with the agencies, you typically have 2 months to get it all through, and we are just in the process, right, to just to get the last few deals under application so that they still can close this year. But obviously, brokers realize that too. So I would say now we will have that slowdown for new listings for until the end of the year, but it certainly will pick up again in early next year, and particularly once we get a feel whether we have reached some of these rate increases. I think that also provides more confidence uh, to sellers to go back to the market with their deals. Right?
Yeah,
Uh, Now, another item, obviously, Powell is certainly not happy with the stock market accelerating with as soon as the market feels oh we are again pivoting and everyone is rushing in. He's certainly not happy with that situation. He obviously likes when the stock markets and the financial markets in general are strong, but that is giving him also an indication that we still have that bubble type of environment that he obviously wants to avoid, right? Uh,
right,
Now, I think the last item that we also need to touch on, we are not operating in a vacuum, right? And just today we got the news that in the euro market, inflation came in at a double-digit rate again, and obviously it really depends which are significant trading partners with the U.S. So some of these countries, the inflation has been lower, but with others that really matter to the U.S. In terms of trading partnerships, the inflation came in really strong, right? And uh, that is Germany, which is really key, right, at more than 11%, as well as the UK at double digits too. So these two trading partners have have an impact also on the US, and that will likely, again, in my view, an impact on how Powell and all the other officials will approach the next rate hike this week, and potentially also what we are going to see in December, right? So, our viewers, we really would be we would love to hear from you what you think. Please put them in the comments. So, is the Fed going to pivot? If they do, what's your prognostication of by how much they are coming in with the rate hike this week, and what are your projections where they're coming in December? But if you can, do not just put in a number, but also maybe come up with arguments why you think in one way or another, right? So that maybe we can pick it up in the next peak market watch and discuss some of these arguments. Obviously, there are arguments for both pivoting as well as for the Fed to stay hawkish, and nobody knows, right? We don't know it. No one else knows it where they are going, but we ultimately still have to make business decisions every single day based on what we believe the most likely situation is going to look like and where rates are going. And that has a big impact, certainly for all of us on the investment side and the related financing. So please post your comments, and as well as with not just again with the specific rate what you think, but also with some arguments that are pro or con for whatever a rate hike or a pivoting will be. So thanks again, everyone. John, thanks also to you to joining, and we look forward to see you guys at the next peak market watch soon.
Thanks, Anton. Thanks, guys.